Alright, welcome MegaWhale team to another video. Today we're going to be doing a technical analysis for QNT. This coin saw a very parabolic 2020. It rose well over $400. I think the low was around even 20, but obviously we're in the KuCoin chart here, and the low is expressed at around $30. So a well over 10x gain, and it gained a lot of traction and it gained a lot of hype around late to mid-August, particularly when it went up from $184 to $440. Absolutely insane rally. But since then we have dropped a considerable amount, dropping a total of currently 59%, but hit a low of 73%. So a pretty huge pullback for QNT. The question is the pullback over, and what do we expect to happen going forward for QNT? So currently we're just looking at the chart. We haven't really done anything. I haven't actually personally looked at a chart for a while, so we're going to go through the analysis together. But what I do identify straight away is we are in a descending channel. So we're going to draw a descending channel in. And now for those of you who have watched a few of my other videos, you'd know that descending channels are inherently bullish patterns. So this is inherently a bullish pattern. The question is, the big question we need to answer basically is, when are we going to break it out? So when are we going to break to the upside? Because obviously there is a lot more downward movement over here. There's a lot more downward room to move. We can move all the way down into this range, and you know that would be a pretty hefty drop from here. That would be another 70%. So we've got a huge range to go downwards, and at the moment not a lot of room to go upwards. So if I'm looking at this chart right now, would I be buying this coin? The short answer is no. The reason being is the risk reward ratio isn't great. Our resistance is only 5% higher, and our obvious bottom on this descending channel is 75% lower. We haven't mapped in our short-term and long-term resistance yet, which we will do in a second, but just taking a look at the chart, we are expecting, or we're hoping to see a break of this downward horizontal resistance, a retest, and that would be our confirmation that the downtrend is over. We would either push sideways or we would push upwards, and that would be our entry point. So what we'll do, we'll put in our horizontal supports. So what we're going to do for that one, we'll bring up our volume profile. So here is our volume profile. As we can see, this records our historical data of buy and sell signals, buy and sell volume, sorry. And as you can see, this whole range over here is a huge gap. So between $100 to about $145, $150, we've got a huge gap. Meaning if we do push below $150, we are going to crash pretty rapidly. And we saw that happen here. Huge liquidation wick all the way down to the bottom of that range. And we will see that again. In saying that, if we're able to push past at 183, which is lines up to about a horizontal resistance, we do kind of slope upwards here, meaning that it's going to be a lot easier to climb upwards back into about low to high $200, just under $300. It'll be a little bit easier to climb upwards than it will to go downwards if we do break over the $183 range. So we know our trigger point for this is going to be just over here. So we'll put a red line for our trigger point. This is going to be a resistance level as well. This is going to be our major resistance level on this chart for now. And obviously our major support is going to be down on that POC line, which is $72. So that is the levels we're looking at here. We're looking for a break of 187 to be exact, and then a retest to continue upwards. And obviously the lowest we think the price can go if we continue downwards is about $70, which is a huge drop from here. So let's go ahead and input the rest of our supports. We do have minor support around this range of 157. I did say before, if we drop 157, we will likely crash. That will be our last line of support. And then obviously we have resistances moving up from here, which is $210, and then not a lot up until we've reached that higher range of around mid to high 200, which is going to be sitting around 288. So the upside potential if we break 187 is about a 50% increase, and obviously at the moment the risk if we had to enter now would be anywhere between a 8% risk to a 57% risk. I definitely would not be buying QNT now. So that's what the chart looks like. That's what we're expecting. Just to map it out, I'm going to show you with the arrows, possible scenarios. So possible scenario 1 is we bounce here and we push upwards, obviously breaking these levels and retesting as support. That would be your entry point. And then obviously we push higher and that would be our first target. This will be our major resistance. So that would be where we look to just take profits. Second scenario is we end up dropping below and we do some kind of zigzag motion, basically all the way down in that bear market, down to a low of $72. So with that being said, let's dive into some technicals. Let's suss out the short term. Let's see what the technicals are showing us. Of course, the chart can show us a lot, but without those technicals, it's hard to gauge momentum and it's hard to gauge overall direction. So let's get into it. All right, guys, so the first technical indicator we're starting with today is the bull market support band. We can see we've ranged underneath the bull market support band ever since around early September. We've kind of pushed under, continuation under, and then we went sideways. We had a few candles wick up. We can see we've had a few wicks up and above the bull market support band, but we haven't had any significant closes. And a significant close is a close above this horizontal resistance. And we haven't seen that. We had one breakout, which was on 9th of November, instantly sold back down and rejected. And we had a similar thing happen around the 27th of December. We pushed up and we kind of got rejected off the top, and more recently, early January. We're still underneath that bull market support band, and the bull market support band is converging and will eventually line up with that horizontal downward sloping descending channel resistance, which is going to make it a little bit harder. If we factor in the fact we have the $187 resistance, which is our major resistance, as well as that horizontal resistance and that bull market support band, it's going to be a challenging one to break. But if we do flip it, we will see a strong move upwards, quite similar to what we saw over here. I don't think it's going to be like a 2-day candle spike, an explosion. It might be a little bit more drawn out, but we will see a move traveling upwards to that target of $288. The question is, are we going to move downwards first before it happens? That's what we're going to try to figure out next. So let's take a look at the Ichimoku cloud. Now, the Ichimoku cloud is one of my favorite indicators, but it is great to identify market movements and momentum shifts on the charts. As you can see, we are rejected from that conversion line, the baseline. They're still above the current price action. Our lagging span is still underneath the clouds, which is confirming the trend is in fact downwards. We've been in a downtrend confirmed ever since the 11th of October, and we are underneath our red cloud. So again, a lot of resistance in this zone, a heap of resistance. Let's move over to let's go 4-hour chart. Let's see what it's looking like on the smaller time frame. So on the smaller time frame, you can see we are still getting rejected from that cloud. We haven't broken the conversion line. The lagging span is still under. It's indicating that we're pushing sideways. You can see this $157 range acting as a little bit of support here, and it will continue to act as support until it's either broken downwards or retested and we break up past $187. So for Quant, I would say right now is more of a waiting game. I'd be waiting for a definitive move upwards. I keep saying that word definitive because right now the market is in a consolidation downwards. We are moving downwards, and we are still waiting for that strong enough, propulsion upwards to confirm that we are moving. And as we can see on the daily with the Ichimoku, we are actually coming over that conversion line now. So that is a good sign. We are coming over the conversion line. The question is, will that result in a press and a break and close above the $187 mark, which is really the key thing we're looking at on this chart. We don't want to see another move like this over here where we just went up and we just closed back down. A huge spike candle upwards over here and then it closed back into the channel means nothing. So we are waiting for that close. You need the break, you need the retest, and you need the close. You need that confirmation that this channel is in fact now broken and we are forming a new trend, and that will be your lowest risk entry point. You'll put your stop loss just underneath the horizontal channel, and then you'd obviously aim to hit your targets, whatever those may be. $288 being the highest target. So we're talking bearish scenario. What could happen? Well, as you can see, this whole range here, if we bring up the volume profile again, let's bring that up again. You can see that we really don't have much historical buying volume or buying pressure in that range. which means there isn't a lot of orders, and we're expecting it not to be a lot of orders. So if we do lose this $157 mark, we are quite literally going to crash down further, and we will expect a buy-in to be around $72-ish, around that range, which will be a potential bottom for Quant and a great entry if we go to the downside. So guys, that's a short analysis of Quant. Key things to take away is we are in a descending channel, which is bullish. So eventually we will have a breakthrough upside. The question is it now or will it be later? That's what we're kind of figuring out. And how we'll be able to tell if we're going to move upwards, we're waiting for that daily close above the channel. So if you're into Quant and you like Quant, you know, take a screenshot of this or save the video, or even chart this chart out on your own chart, on your own trading view, and chuck an indicator on that 187 mark and watch the chart. But so if we break over horizontal resistance, it could be a great entry point. In saying that, if you do break below 157, I would definitely not be holding anything lower than there. Again, you need to wait for the close, but I would not be holding anything. I would be selling. And right now is not the best time to be accumulating, and it's definitely not the best time to be buying for a long-term hold. Remember, just because a coin is cheap, just because a coin is down, it doesn't mean it's a good time to buy. Okay guys, hope you enjoyed the video. If you liked it, remember, like, comment, and subscribe. Our Twitter and Telegram links are in the description below. And if you have any questions, you know where to put them. I'll see you in the next video.